Yo, I'm Brendan, and today we're going to talk about how much money my $31,000 dividend portfolio gave me this month. This is one of my best months ever, and so this is a very exciting kind of development because this is turning into a real thing. We can buy more than burritos, not quite race cars, but with this kind of dividend income, it's getting real. If you're not familiar with this series, I've been doing this for over a year now and just tracking everything that happens month by month, revealing all my dividends and what I've invested in. And I started out with like $700, transferred more and more money and more stocks until we've reached where we are today, which is just over $31,000. It's fun. As you can see, if I scroll down here, a lot of my investments haven't actually appreciated in terms of growth. They've only really spit off dividends. These first three choices are all in the red. The next few are mildly green. And then as we keep scrolling down, a bunch more are just in the red. So it's kind of hit or miss so far with me and dividend stocks because by and large, most of them have been losers in terms of the chart actually just going up. But typically it's what we expect from dividend stocks. They're not necessarily going after the most growth. They're going after dividend growth or just paying out a dividend in general. And here's a little preview of a future video coming up really soon. My Robinhood retirement transfer has landed, and I'll go over the process of what that was like to transfer over my old 401k, how the Robinhood match worked or didn't work, and I'll show you what I'm going to be investing in with this IRA. But for now, back to dividends. I might have some dividend ETFs and stuff in the IRA. We'll see. It is officially spreadsheet time. And this is the breakdown of March 2024. I bought $20 worth of energy transfer with free Robinhood stocks from you guys signing up. Thank you very much. And I also bought $20 worth of Rhythm Capital, and that was it. So only $40 more went into this account in March, except for the appreciation that did happen. I know I was just downplaying the appreciation, but for the last month, I've actually done pretty darn well for a dividend portfolio. It's gone up 3.42%. That's pretty awesome. I mean, the stock market in general has done really well the last month. Crypto has done really well. A ton of markets all over the place have done well, so it's not that surprising. But compared to, let's say, like my year-to-date chart that's only up 4%, or my last entire calendar year that's up 8.4%, that's like almost half the growth right there in just the last month. So that's pretty exciting for me. And then we had some actual heavy-hitting dividends here. Between JEPI, SPYD, SPHD, and SCHD, I mean, we're talking about burrito dinners for the whole family here. $44, $24, $31. I mean, this is everybody gets their own burrito tonight. Probably bean and cheese burritos with the JEPI dividend. But if we add them all up, dad might get a pair of racing shoes or something. Not the full race car, but could get some pelote driving shoes, maybe some Sparkos if I want to be a little more flashy. Then I had this weird development that happened where you look back at previous months. Well, actually, two weird developments happened. On previous months, I had this WKLY dividend paying stock, and it was a weekly dividend payer. That's why it's called WKLY. And it wasn't a great return. It wasn't a great investment, but I did it just because it was a fun kind of experiment, and I wanted to see, does it really pay every week? And then suddenly I look in the Robinhood app and I don't see it there anymore. And so I had to type in WKLY and find out it's no longer supported on Robinhood. I don't know what happened there, but apparently it's dropped. The second weird thing I found was here in my spreadsheet. And here's really the danger of having a spreadsheet like this. Mine is by no means complicated. I mean, this is like basic math. I'm just adding up columns and stuff. But when we build something like this, we're at risk of errors. And I found out that my little totals here, each monthly total where I would add up the actual dividends. So for December, I would add up this $94. For January, I'd add up this. What I'd done wrong was I'd taken one of these little boxes and just done a copy and paste. But the issue was that my original formula that I had done that with didn't account for the entire column of dividends here. And so that meant for like the last 3 or 4 months, I'd shortchanged myself and I did all the dividend calculations wrong. And all my past videos about it are actually shortchanging how well my performance was too. So whenever I would calculate, like for this one that was December, previously, I didn't have this big $30 JEPI dividend in there. And so now it shows that I got 11% for that month, and my average of the yearly rates by month is up over 8% then. But I just updated all those now, and so now I'm showing accurate numbers, but before it was inaccurate. Yeah, it was this before. It was showing 7.5% before, and then the average of the yearly rates was only 7.7. It does, as it turns out, make a massive difference if you actually include all the dividends. So as much as I love spreadsheets, even simple ones like this, man, you got to really go back and like self-edit and self-correct because those kind of errors will really throw you off. But if we go back through and look at the monthly dividend totals, this month, March, was the most I've ever gotten. I started getting about $5 per month, got up to close to 100, 94, 95, $100 in a month, and then finally now in March 2024, $148 in a single month. So if I calculate that cash return based on the actual amount that I've contributed, so my cost basis being about $29.5, then that means my monthly return, just counting in terms of a month, was 0.5%. If we extrapolate that out for the year, it was 6%. And then if we keep going and do the average of all my individual monthly rates that I've had so far in the past 13, 14 months, it's at 7.5%. And this is not including the growth, that 3.5–4% growth that I've experienced this year. This is really just showing us what the dividends themselves have done, because that's really what I'm tracking here. I can see what the overall growth is from within the Robinhood app. That's easy enough. I want to specify and break out just the dividends themselves based on the money that I have put into it, just because I want to see how well are the dividends themselves performing. And so I'm still super happy with this. And I'm actually tempted to ratchet this up some more because we have a big lump of cash sitting in M1 Finance and it's getting 5% interest, which is great. It's making us like $100 a month, which is not bad. But if this account is regularly averaging 7% and it's just a taxable brokerage account, so the money is still technically just as feasible, just as reachable to get out and use if we need it in case of something, why wouldn't I put it in the dividends? I mean, my only concern really in doing that would be that then something happens in the next 12, 18 months where the stock market in general performs really poorly and goes down. And if that little dip happened to also correlate with a time in our life when, oh my gosh, we need to pull out $10,000, well, that'd be a huge bummer because now I tried to make an extra $50 or $100 a month and instead I'm going to end up losing hundreds or thousands of dollars by pulling this money out when the market's dropped. So that would suck. I feel like these are the kind of decisions where there is no right answer. There's no perfect, amazingly optimized, well-considered answer that takes all factors into account because even if I did all of the analysis in the world, we can still not predict what's going to happen in the future. But for me personally, I'm really not afraid of the stock market being at all-time highs right now. I know that's a lot of people's concern is, oh my gosh, it's at an all-time high. Maybe this isn't the right time to invest. Maybe we should hold on to cash and wait until it dips again. Whenever I look at a chart long term and I see that how regularly it hits all-time highs, I'm just not worried about that. The stock market's job is to hit new all-time highs every few years or every 5 years or however often it does it. That's what it's supposed to do. It's not like we've ping-ponged against the ceiling and now we're bound to drop back into the basement before we ping-pong back up again. That's just not how the stock market works. It goes up and up and up overall over time, or at least it has. And so just because right now we're at an all-time high, it doesn't mean we need to be that much more fearful than at any other time. I'm hoping that it just continues to perform the way that it always has. And when we look at today's all-time high, it'll look like any other all-time high from 20 years ago where we go, oh man, that would have been a great time to invest before it did all this growth. That's what today is. It's one more of those times when, hey, it's a good time to invest. So I'm personally a little bit torn about that. I'm still not making anywhere near the income I need to from YouTube, from being here with you to actually support us as like a full-time career. But I'm diving in. I'm making these videos for you every single weekday so we can give our best shot at this and try and make this dream come true because I want to give you the most value possible. And hopefully if I'm giving you the most value, then it's worth watching these videos and it's worth sharing these videos with your friends and making sure that you're subscribed so that you can see everything that's happening in the future. But I don't think I've given a kind of disclaimer about this in the past. I don't want this to be in any way some kind of like flex to go, oh, look, I've got $31,000 in this dividend portfolio and I'm getting paid $148 a month as if this is some mountaintop experience. For a lot of people, this is pennies. This is nothing. And for other people, this is a ton of money. And so I don't think I'm trying to put myself in any kind of ranking with anybody. I'm not interested in that kind of comparison. What I want to do is just be transparent with you and show you what's going on with me and my accounts so that if you're curious, what does it look like to invest with Robinhood? What does it look like to track dividend stocks? What does it look like to expect a certain amount of dividend returns based on very mediocre investing on my part? I want all this to be as transparent as possible for you so you can see it. And the reason for that really at the core is just to show you, not just tell you about it. We can talk about concepts all day long. Oh, this kind of dividend investing could do this. Or if we get into more detailed stuff, if we invest in covered calls, or if we get into MLCs or BDCs or other kinds of dividend strategies, it could do this or that. And there could be benefits of this or that. But until you actually see it happening, it's not real. I'm by no means wealthy enough to be just a total guinea pig, but to a degree, I put myself out there and show you what's happening with my own money to just be as clear as possible. Times like this, it's pretty easy to be excited about sharing that kind of thing because stuff is going up. Like my dividends are going up, the investments overall are appreciating, they're going up. Like the chart is green, right? It's going up from left to right. And so I can sit here with a smile and be like, yeah, we're doing the thing. We might feel differently about things whenever the chart starts looking like this. And it will. From time to time, it will. So I'm fully expecting that. And I'm still expecting to share that with you, because that's just part of the journey. I know I talk a lot about burritos and race cars, but how far away from an actual race car are we here? Well, by my math, if I wanted to do e-racing, which is to say sim racing, I would probably need to plan on spending something like $4,000. By the time you buy a computer and all the components to simulate what it really looks like to drive, a kind of mid-level setup is probably about $4,000. So if we keep making $148 a month, how many months would we need to wait dividend investing wise to be able to buy that with cash? Just passive income, we're talking about basically 27 months. So a little over 2 years at the current rate. And then of course, I've actually already done this math, and I did it with dividend investing back years ago whenever I was really serious about getting back into racing. This would be basically like a cheap Miata race car. This is a real race car, a Mazda Miata that's very, very typically raced out in the world. I would think the absolute cheapest car you could buy and expect to have it work is about $10,000. And then between incidentals and a really cheap trailer, we're talking about a startup cost of about $14,000. Plus you've got yearly running costs. I've totaled those up to be somewhere in the range of $4,500 to $5,000 total, which amounts to about $400 a month. And so the current rate that this dividend portfolio is actually paying me, by the time I had $67,000 in the portfolio, it could pay for the running costs. I would expect to be making around $400 a month, but that doesn't account for this initial startup. So you'd have to find that 14 grand cash somewhere else, or otherwise at the current rate, without investing any more money, I'd have to wait 94 months before I had $14,000 in cash to buy that initial race car, trailer, the startup costs. So as of right now, we're still pretty far away from actual race car territory. We can do it though. We can get there. If you have any questions about my dividend investing in general, or if you have any suggestions about future videos that you'd like to see made, then leave me a comment. Otherwise, here's a playlist of the dividend investing videos so far, in case you want to catch up and see what happened in the past videos, or just click on one in particular if that milestone seems to tickle your fancy. Till next time, I'll see you guys later. Bye.